Hello, I am Lisa J. Stocks here with your Sunday Stock Talk Live. And I want to quickly just say happy holidays to those that are celebrating. But as always, I'm sticking to my schedule of Sunday, 3 p.m. Eastern Standard Time. I will be here bringing a live episode. And today we're going to be talking about strategies that might not make headlines, but absolutely work. And they are wealth builders. The boring way to wealth is what I called it. So let's talk a little bit about some of the steps that I'm always talking about here on my channel that can help you. They are proven, they are nothing fancy. Excuse me. But I just want to always make sure that people know that investing is not complicated. It is a way for us to build wealth, and it is a way that, I want everyone to know that it is for them. It's not for the rich, the wealthy, the whatever. It's for all of us. So let's get started. Now, you don't have to time the market. Right now, the market is beaten down, and I want to make sure that people don't feel turned off to investing because of the way that the economy is right now. If anything, I want to remind everyone to have the long-term vision of, if there's a good time to start, you want to start when the market is low and then be getting out when it's high. That is the whole goal of investing. Buy low, sell high. And when I say that, I'm talking today, I'm really going to be talking about investing. Investing is holding for a longer set of time. Trading is in and out. That might be a few weeks, it might even be a day, depending on what you're doing. But right now, I want to chat about investing because it is Financial Literacy Month, and I've been so much talking about tariffs and things like that. But today, I'm just going to talk about the basics. Now, Pipeline, thanks for tuning in and chatting even before the live started. So I know Pipeline is over here talking about Bitcoin. That is his personal choice of where he likes to focus on for his long term investing. But I'm going to be talking about more basic mainstream things right now. So, first, I'm going to talk about the power of index funds and exchange traded funds. This is a basic way to get exposure and not have to pick one individual stock. I'm always talking about that over here. Some ones that I've been sharing my journey on are VTI, the Vanguard Total US ETF, exchange traded fund. So it's a basket of stocks that's going to give you exposure to nearly 4,000 investments, all by investing into this one investment choice. Now, these type of investments do have a fee associated with them, but if you've also been here before, you know that I strive to make sure to get that exposure, but also associate that with the lowest expense ratio possible for the goals that I am trying to achieve. And VTI, for example, as well as VOO, which is a Vanguard S&P 500 ETF, have an expense ratio of 0.03%. I just shared an update of my S&P 500 investing, and another one that I do over at Fidelity that has an even lower expense ratio is FXAIX, and that one is 0.015. Happy Easter, everyone, and thank you for tuning in. So yes, the S&P 500, let's talk about that for another second. They've had an average return of about 10% for the last 100 years. Now, this year, it's not on track for that so far. We're only one quarter in. And of course, there are some years that it has a negative return. And that's why we have to be focused on investing long term, holding it until you are ready to tap into it. This is not an overnight thing that I'm talking about today. I'm talking about long-term investing, retirement planning. If your children are small, planning for their higher education needs when it's time for them to go to college, or go out there into the world and work on getting a trade or whatever path they take. So that could be the whole 18, 20 years, their start to life. If you're just getting started working in your 20s, that could be you plan on working until you're in your 50s or 60s. So these are the things that I wanted to touch on. And like I was saying at the beginning of the show, I want everyone to know, continue to know, that investing is for everyone on every budget. And another way that we are able in this day and age to take advantage of that outside of our 401k, which I'm going to talk about a little bit at the end, but there is dollar cost averaging. That is available on so many platforms, all of the platforms that I currently use. And so that is Fast Eddie. Fast Eddie, I hope you have a delicious dinner. I'm going to come back to your comment, but thanks for tuning in. So when it comes to dollar cost averaging, that refers to investing a fixed amount on a regular basis, regardless of the market conditions. But fractional shares, dollar cost averaging, however you think about it, you can invest small amounts of money and just be consistent with it and build up your share size. Right now, there are many investments. I think Netflix, let me pull up Netflix for an example. I think that's something we all know and probably might be using uh, in our homes. Netflix, one share is $973. Now, if I chose to have Netflix in my portfolio, or like I was just talking about, VOO, for example, VOO, $483 per share. If these amounts sound like, oh, that's too much for me, don't look at it like that. Go about, I'm going to do $10 every Friday. I'm going to do $10 every day, $5 every day, $25 every paycheck. You figure out what works for you and stick to it. And when I say stick to it, I mean, give it time, give it years, give it 2 decades. Just keep on going. And then show me where you're at after you focus on it for a while. And you have to choose what's right for you. I want everyone to also not be, well, I'm going to hold off on that. Let me continue on. So that's dollar cost averaging. Over on the platforms that I use, I just want to touch on Fidelity. You can invest as little as $1. Um, and on other platforms that I use, most of them are $5 is the minimum investment. But in time, like I've been doing $10 daily into VTI, and it didn't happen overnight, but right now that portfolio value is, I believe, over $7,000, because I literally every day, $10 every single day, when the 5 days a week. And when there's a holiday, I make up for it. So even though we had a holiday on Friday, for example, I did 2 investments on Thursday to make up for it. So will I change my DCA strategy if the recession occurs? Um, when it comes to my VTI, no, I'm going to stick to that minimum of $10 daily. But I also incorporate, I think it was the Monday before last, the Monday before Trump, the Monday before the Wednesday when Trump announced that he was going to pause some tariffs for 90 days. On that particular day, I didn't do my regular dollar cost averaging. I was buying full shares of certain things to add to my portfolio, because when the market is really when certain things that I want more of in my portfolio are pulled back, I'm going to go heavier than my standard. If I'm saying if my standard was had been $25, but I see a particular exchange traded fund that's in my portfolio is really significantly below, like down 6% or 10% on the week, on the day, then I'm probably going to buy a full share if my budget will allow for it. But this strategy also, by just being consistent, it mitigates the risk. And I'm a person that, you can just stick to your plan no matter what the economy is doing. That is truly what dollar cost averaging is. But you can also do a mix of things. So, like I said, if my budget will allow for it, I'm not going to let time pass when I feel like this is a time when I want to go heavier with my investing. But by just being consistent, weekly, daily, payday, you also mitigate the impact of market volatility. It removes the emotion out of it also. And so, you'll be able to just at the end of the year or whatever time frame, you bought at the highs, you bought at the lows, and your average prices are all just gonna, mix together, and you just move forward from there. If that plan doesn't work for you and you want to be able to, you have to do what works for you. But it is a simple way to be consistent and build wealth. So far we touched on quickly uh, incorporating index funds as well as dollar cost averaging. And another video that I recently did, guys, I'm just these are basic things that I'm talking about today, but these are things that I want everyone to know. And it is Financial Literacy Month. And so I want to make sure to touch on the basics for those that are not too far into their financial journey or might be lacking in certain areas. Because, sometimes you just overlook certain things. Sledge is saying he has a boring strategy. That's okay. It's okay. It's okay with me. I know a lot of my strategy is boring too, but you have to we don't need too much excitement. Some people do. Some people want to be 100% into crypto, but let's see. Okay, so next, another video that I recently did, and I was trying to show people a couple of examples of using the investment calculator in order to inspire you and give you some insights on how your investments can grow over time. Basically, the magic of compound interest. You have to set goals for yourself, especially when it comes to retirement. But I'm going to get further into that. If you've never used an investment calculator, even if you feel like you're on track, I think it's something that you should try out. Might be something that you can do with your kids so that they can have an understanding of getting started with investing early and leaving that investment in place, not thinking of it as this is, a long-term investment plan. Not this is going to be to fix my furnace, to buy a car, to if some things come up and emergency funds and your investments. I like to always touch on that I feel that those should be two clearly different things so that you don't have to tap into your investments and lose the power of the growth because you needed something today, but that lump of money that you took out today, what it could have become later on down the road when you truly need it. And we see so many people struggling in retirement nowadays. So we have to think about the big picture. So another thing that you can incorporate is, some of the things I'm touching on are more so based if you are doing your own investment plan. When you are just contributing to your 401k, a lot of this stuff is built in, but I'm going to get more into some points that I want to share about specifically when it comes to a retirement plan like a 401k. But when you have your investments, making sure that you are reinvesting your dividends. You don't have to tap into them immediately by incorporating the DRIP, as they call it, the dividend reinvestment plan. Your dividends are automatically reinvested for you, and then that's going to help you to build up your share size, be on that path for the compound growth that I was just touching on. So, are you enrolled? If you have investments, like in a taxable account, do you have that set that the drip is on so that your investments are automatically reinvested, that you don't have to have that going into your cash balance? Right now, I have it on for everything. Now, I might turn it off. I think I might have said this in some of my previous lives. I haven't done it yet, but I might turn it off for realty income in order to use that money for other investments, because it is a position that is more substantial than some others in my portfolio that I want to get going, building. So, these are just a few points that I wanted to share that you can combine together. Boring ways to build wealth, index funds, exchange traded funds, incorporating dollar cost averaging, not being overwhelmed and thinking I have to have a lot of money in order to get started with investing. And I've even had people comment on my videos saying, "Oh, when I get $500 or when I get $1,000," and I think to myself, like, did they watch my video and make this comment? Because that's not really the path. That's their personal choice, but that is not the way that I go about it. If my daughter's account, if there's $100 there, if there's $50 there, if there's $25 there, we can make our investment plan. We know we have our percentage allocation set out of, she does 80% into ETFs and then the balance into individual stocks. So no matter what amount of money we have, we just take it and we break it up into our percentages, and we know, okay, this particular ETF gets 40% of whatever amount of money that we have. And there's been days when it was $2.50 going into a particular investment. For example, I think her Home Depot might be a 5% allocation. So, depending on how much money we have, sometimes it's able to get the whole $5. But there was one day we were doing our investments and it was 250, and Fidelity allows for that. And I've also had people say, like, it sounds like a joke. No, it's not a joke. You keep going with this over a long period of time. And Home Depot is another kind of a pricier stock. Let me see. Oh, that's not right. Let's see, how much is it? It's $355 per share right now. So, yes, if we're only doing 5, 10, it's going to take a while to get a full share, but that's okay. That is okay. We will in time, because we are being consistent and staying focused. And let me take a quick look at the chat. So, yes. So just a few things, boring methods that really in time, especially guys, this is really, I really encourage you, if you've never done it, if you don't have a plan on how your portfolio is going to build, if you don't have a vision of what your contributions today could look like in 10 years or 15, 25 years, use the investment calculator. Get in contact with your brokerage company and have a conversation with them. I know I use Fidelity, and whenever I call, I'm able to get someone on the phone to have a free conversation with, if I need some guidance on, what I'm working on, or if I have a question. They have been a great resource, and I can't speak for Schwab or these other places, but definitely give it a shot if you have questions to know if you are on track. So let me take a quick station break. Thank you everyone for tuning in. I hope you guys are having a nice holiday, maybe a nice dinner or something. One of my family members sent me over dinner, so I am all set. I had some chicken. already seasoned, marinating in the fridge. So I did cook that up, but that's it. I didn't have to do anything else because someone sent me over macaroni and cheese, potato salad, stuffing, ham, and turkey. So we are set. I'm not doing any other sides. We are set for the rest of the day. So thank you, everyone, for tuning in. Let me see what Stock Talk David is saying. Using these downtimes in the market to build up positions, I guess the positive outlook I have while watching the values drop. Yes. Yes, but you've been in it for a while, so you know the big picture, and that's great that you're sharing that through your channel to encourage others to be focused. What's your thoughts on having multiple brokerage accounts for investing? I have multiple accounts. You have to do what's comfortable for you. I have all of my retirement accounts, and my daughter's accounts right now are at Fidelity. And in addition to that, I have three other accounts that I'm doing on Webull, Moomoo, as well as the public investing app. I'm not a Robinhood girl. I never had an account on Robinhood. I closed my M1 account because I wasn't using it, and they started to have some fees associated if you didn't have a $10,000 balance. But because I hadn't got into the habit of using it, there was no chance that I was anywhere near a $10,000 balance. So I closed that account last year when they started those fees. I think it's okay. You have to do what's right for you. Uh, some people might feel the amount that I have is too much or overwhelming, or they want it all at Fidelity or Schwab or something like that. But it was my personal preference, and I take all of my accounts seriously. So it doesn't matter where it is. I'm going to be mindful of it, and I'm comfortable with what I built. So where do you have elevated mindset? Where do you have your accounts at? Or do you do options and mix of different things? I think that it all works out for me. So let me see. So now those are the points that I wanted to talk about as for the beginning, just those basic things that I want everyone to know exist. And now I want to talk a little bit about retirement in order to make sure that we are maximizing our savings, because a lot of us are that's what we do. I know for a long time that's all I did. I went to work, I contributed to my 401k, and that was the extent of my investing. But right now, if you want to do more, you can. It's very accessible. I do, if not all, of my investments from my phone. Very rarely do I even get on the computer to do something related to investing, trading, or anything like that. So, let's see. Okay. So I was looking at an article, and it was talking about the average returns of 401ks. And this is affected by lots of different things. But really, the reason why I want to continue to talk about this is because I don't want us to retire broke. I want us to, I know it seems difficult, but try your hardest to figure out what your needs are going to be. I know whatever age you are today, what are going to be your needs in retirement? And have your mind open to the retirement age that you think you are going to retire at. It might not be what you think. You might get ill, or something may happen, and you may have to retire earlier. So be on the path to set yourself up as best as possible, as far as maybe paying down your mortgage, decreasing your costs, but of course focusing on investing to take care of your older self. So now, okay, back to what I was saying. Now, I think that I talk to people, and I try not to pry. If they want to have the conversation, then we will. But overall, I've talked to some people, and they're like, "Yeah, I have a 401k," and they kind of have the mentality of, "I work at whatever prestigious company or university or whatever," and as though I don't have any concerns about the performance of my 401k. It's there. I do it. I do that. It's not that easy. It's not that, black and white. You have to get in there and do some work when it comes to making sure that you are on track. Everyone's goals are different, everyone's income is different. But I just want to give some encouragement on making sure, especially the performance. This is something that has affected me personally, not being invested into the right thing, especially, depending on your age. I didn't need to be in a certain investment that was way too conservative. It had a poor rate of return, which, I'm out of it now. But I lost. So I will never know exactly. I don't even want to even try to figure out how much money I lost in the process while I was unaware and just turning a blind eye to it and just not in the place that I am now to make sure that my money is growing as fast as possible. So let me just take a quick look. Can I do a video about being a rental property owner, pros and cons with the money spent on buying a house done better in the market? Um, I don't know if I'm going to talk really. Maybe I can do a live about it. Well, if I do a live, it's pretty much the same thing. Maybe a segment in one of my lives, I'll talk about it. But I really haven't. I never intended on talking too much about that on my channel, but I can consider that. Yes. And it's just so tough right now that it seemed like I needed to hit the ground running and done everything that I could to buy property a few years ago because these prices and interest rates have been insane. And it's been such a huge disappointment that I haven't been able to build up my real estate portfolio the way that I had hoped it would have been at this point. Okay. But yes, noted, Fast Eddie. Uh, and thank you everyone for tuning in. All right, so back to what we were talking about. Now, so I was looking at this article and it says that the historical rate of return on 401ks range from 5 to 8%. So I just wanted to touch on that a little bit, which I think is kind of low, and that fluctuates based on the market performance and your investment choices, and as well as your individual contribution rates. So as you as your earnings increase, as you get older, or all these different factors, I just want to give encouragement to stay focused on investing as early as possible and just thinking about the long-term picture. I always encourage you to talk to the older people around you. How are they able to, the people that, maybe both, if you have older people around you that you're not liking the way that you can tell that they're struggling, that they're having to live in retirement or under their particular circumstances. Or if you see people around you, older people, your aunts, your grandparents, even your parents, depending on your age, how are they able to manage? What was their plan? Is it because their plan might not be what our generation is going to be faced with? Are they getting pensions, Social Security? Did they pay off their home, or is their their mortgage and their costs drastically different than what yours are? Because our starting point was not our parents' and grandparents' starting point. Not to say that it wasn't hard for them, but right now it's much, much harder in order to just stay on top of the basic expenses of, mortgage, electricity, and all of those type of costs. So have these conversations if they're willing to, and if you're comfortable, in order to get some insights, in order to help you to be on track. Because one of the points of this live is to not retire broke. So now, back to that 401k. Are you guys, I know right now is especially a hard time with the way the economy has pulled back in 2025. Uh, even more so in the month of April with all of these tariffs and everything that's going on. But in general, if even before this year, just overall, are you keeping an eye on your 401k's performance? Are you just kind of, it comes out of my check and I do that? And like I was painting the picture of the person that I was talking to, because that's, in my opinion, definitely not enough. You have to know what the performance is, as well as, are you contributing enough? Are you making those strides, like I said, when you get a raise, in order to increase it on a regular basis? Do you have an overall goal of, by the time I'm 30, 40, 50, I want to have this much invested? Um, and I know, and when I say a goal in line with what you think your particular needs are going to be in retirement. So I just want to make sure that we're taking the time to have those phone calls, make those, sit down and make those plans, and have the long-term vision. Because I shared a post, I think it was to my members. Oh, I don't think it came out yet because I schedule things sometimes. But it was a post talking about just having that mindset of working and stacking your money and focusing on investment in your 20s and 30s, so that you are not working as hard in your 40s and 50s, potentially retiring at those ages. I'm going to sit down with my daughter and have this conversation with her. Now, she's gonna do what she wants to do because she's a teenager, but she has a mom that she sees, uh, the challenges that I have faced with being laid off multiple times, and just everything changing right now with AI and technology. I want her to just have the big picture, as well as, even though, certain ages, certain people think like you might be too young. They might consider it too young to retire, but retirement is not an age. Retirement is how much you have focused on your investing plan, you paying off of your house and all of those different things. That's when retirement is for me. It's not an age. It's not 67, it's not 70. It's when I have enough investments, when I have created the financial stability that I need in order to retire. So I want her from an early age, when she starts working, when she figures out what her career path is going to be, to have that mindset. And like I said, she may not listen. Teenagers sometimes don't, as we all know. But I'm going to share this with her. I'm going to sit down. This is going to be one of our little chats and lessons that I want to give, is that, it's fun to have certain things, all the travel and certain things in your 20s and 30s, but you think about the big picture at the same time, because I want you to then look at, when you are older, uh, make some sacrifices, make some plans, have multiple streams of income, even in your 20s, in order to make sure that you're creating the life that you want. Long term, have some long term vision on this, and don't think that I'm young. It's not time for me to think about this and that. If she listens, she listens, but I'm here to try to give her some guidance. So, yes. So, I was talking about making sure that the performance of your retirement account is what you want. Now, it was easier to see looking at the performance in 2023 and 2024. Like the S&P 500 was up over 25%, or at least over 20%, definitely, in both of those years. So I was using that as a gauge of the performance of my particular investment accounts, my retirement accounts. So I definitely would not have been accepting the rate of return of 5 or 8%. Not at my age. I need something more aggressive. I need to know that my money is working as hard as possible. I'm a person that in those particular years, especially, I wanted to be more heavily into stocks, not bonds and other things that weren't growing at the rate of return of the stock market at that time. And I haven't changed any of my investments, but that is still where my focus is going to be, even though there is a pullback. But you have to do what's right for you and your age, and obviously, if retirement is right around the corner for you, it's you have to then make sure that you're reining things in and being more conservative. And my heart goes out to those that are retiring or on top of retirement and then have to deal with all of the shakeups that this administration is bringing right now. But take a look at your 401k, not just for the performance as well as how much you're contributing. Are you on track for your future goals? Because you might have just started a job, who knows when, and signed up for it. You're contributing, but are you contributing enough? Fidelity recommends 15%, and um, and that 15% doesn't necessarily all have to come from you, because if you are working in a job where you are getting a match, you know, and there are so many different elements to this, but if you're not looking at it at all, the point I'm really trying to bring in here is just look, have your eyes open to it, do the work. There's no one size fit all thing. We all live in different places, different areas. We have different budgets. We make different amounts of money. So you have to know what your goals are in order to be on track to strive to achieve them. So let me see. Thank you, DT Hope 23 channel, for the super chat. I appreciate that. I hope you're having a good holiday. I always see you at the beach enjoying the nice weather. Do I trade options? I like Ashley's option strategy, but my account is too small. Yes, I have that same. I love Ashley's strategy too. I do not do covered calls. I do options, but I don't do covered calls because I don't have there's only two positions that I have. One being my one that I wouldn't be doing any covered calls on is my FXAIX position, which I think is at 740 shares. And the only other position that I have 100 shares in is my realty income. So uh, I love that strategy. I am interested in doing it. I have met Ashley, and she gave me a nice, modest example of something that I could get on track with doing. I don't remember what it was. I think it might have been Palantir at the time. It was a little bit lower price. This was some months ago. But yes, I do options. I usually, if depending on my schedule, uh, there was probably a 5-week stretch recently that I didn't do any, but now I usually do on a weekly basis. I usually go to Keenan Grace's live trading on Tuesdays and Thursdays. But I have many mentors that I have access to, seeing their posts and charts that they share in order to give me some direction uh, on what to trade. So I do tap into that. So let me see. Let me take a proper station break because I see that popping up again. So, guys, if you're new here, please, if you're enjoying this content, subscribe to the channel. Give this a live stream a thumbs up. I haven't even been checking on that. I see I have 34 thumbs up right now. So that looks good. So put on that notification bell, set it to all so that you can keep up with all of my videos and live streams. If you are in a place where you are ready to open a new account, check out my referral links for Webull and Moomoo. For example, those are accounts that I use on a regular basis. They are in the description of my videos and usually pinned in the comments also. And you can become a channel member. Those are all ways that you can support the channel, as well as sending a super chat or Cash App. Thank you, guys. So Am I currently reading any investment books? No, I am not. I am not, and I usually listen to my books. I'm not a big, reader of actual books, but, I probably will go back to a book. It's not a financial book though, but it's something for inspiration, but especially, like, even earlier today, I was working in the garden. I have some boo-boos on my hands, uh, so that is something that I can do instead of listening to music, listen to some books for inspiration, but I can take a look. Maybe there will be maybe your comment will, it give me some encouragement to add a finance book to what I'll be doing, but I think I am gonna be putting in a garden. My garden was, it definitely needed the attention that it got this morning, but I was getting pricked through my gloves and I had something in my hands. I wanted to make sure that I got it all out. Chocolate drop. I know you're about to start. Oh, chocolate drop. I thought you were going to be live at 3:30. You're still here? uh, well, I'll come by when I'm done with my live if you didn't start cooking yet. So let me see. Let me see. Okay. So market performance. Let me see. What did I have written here? Yeah, we know we're going through it. We can remember the past if you've been investing for a while, um, with what the housing market and everything that went on in 2008, the dot-com bubble. Maybe that's a little bit out of some of our age ranges or our what we were aware of when it comes to investing, but definitely, COVID. There are gonna be some things that really shake up the stock market, but, when you stay consistent and invest through those rough times, you see the benefit in the long run. And another way that I wanna touch on again, I know I already talked about this, is leave your money invested. Keep your money invested for the long term. If you change jobs and you change jobs quickly and it wasn't a significant amount that got into your, retirement account or whatever, make sure that you still get that money transferred into an IRA and keep it invested. If that's what it was for, try not to tap into it. Try to let it continue to grow and build and be on track for what it was intended for. If your goal is to have money for retirement, let's try to keep that money for retirement. If it's gifts for the kids in order to help them to have a start in life, help them with their education if they're going to college or whatever comes next for them after high school. Let me see. So, yeah, and another part of that is, oh, it's only oh my goodness. You are in Central Time. Okay, that explains it. Thank you, Chocolate Drop. Um, so, let's see. I think I touched on the contribution rates and everything, employer match. Let's see. Employer match. How many is there anyone in the chat that wants to share? Is there anyone that doesn't have a 401k or 403b or something through their employer, but they're doing it totally on their own outside because they're working and they've created it and they're focusing on it completely on their own without anything coming out of their paycheck, any structure, any employer match. Hello, Denise. Thank you for tuning in. Let me see. All right. So, yes. So whether it's through the easiest investment I think is just having that money come out of your paycheck, get invested for you on an automatic basis, year round, all of the time. But don't just leave it at that. Make sure that you are in tune with what your investment choices are. Make sure that you're checking on the performance. You could be defaulted into something that is not in line with your true goals, something that is not the performance is not doing as well as it could. And the thriving economy that we've had over the last 2 years was a really easy measure to say, this is what the economy is doing. This is the rate of return that the S&P 500 has had, and look at the performance of my 401k. More difficult now But like I said, we have to have our long-term vision, our focus of being able to build wealth long term, take care of our older selves, take care of our kids. Today is a holiday. It's a holiday that I especially for my younger daughter coming up, I had 2 friends and we would all meet up and we would buy a bunch of stuff and we would make Easter baskets for our kids. And, my daughter's a teenager now. Do I wish that I had the mindset that I have today when me and the other moms got together? I wish I would say, we spent all this money, we would buy candy and, dolls and boy toys, all different things. Jam packed there is Easter baskets, jump ropes, chalks, all these different things. Um, do I wish that on birthdays, Christmas, Easter, all of these different occasions that we also were putting a little bit of money into the UTMA account or the 529 plan or whatever we chose as a vehicle to invest for our children? I do, but all I can do now is be able to share this knowledge that I got a little later in life with you guys to give you guys the opportunity to do this. If you've given out any gifts for Easter to any family members in your life, your own kids or your niece, nephew, whoever, maybe next time around or maybe even not associated with the holiday. We don't have to wait. Can we start to bring them along on this journey with us? And I often say that the most important investment I believe is your own self, taking care of your older self, especially if you're behind in investing for retirement. But at the same time, we spend so much money on kids with the clothes and the sneakers and all of these things and the video games and all of this stuff. So even if it's a percentage, even if it's, letting one family member focus on one thing and you do the investment contribution this time around, we really can give them a head start because we know we are I think we all know someone that has huge amounts of uh, debt related to going to college. I don't know why, but for some reason, I never ran into any student loans on my path to getting my education. But let me quickly thank Debt Free Dad for that super chat. I hope you're having a nice holiday with your family. I appreciate that. And let me see. Just take a look. But yeah, that's basically everything that I wanted to cover. I'm going to definitely take a look at the chat. Please let me know if you drop any questions that you have. But I just want to continue. If you haven't been through the whole show, I'm paying my kids tuition out of pocket. Wow. Are they going to a state school? Is that affordable for you, Sludge? Without any planning? I don't want them to be stuck with loans like I was. Okay, that's great, that's great. So did you invest? Did you have a 529 plan? Did you have some long-term plan on preparing for, paying for college? Now, I didn't have student loans, but I started working full-time when I was 19, so I definitely took on some debt related to going to college, but because I was working, I did get some tuition reimbursement and different assistance, but it is very expensive, very expensive. Thankfully, my oldest daughter wasn't burdened with, student loans. Well, she was for her second master's degree, but she chose to go and get a second one. Up until that point, she didn't have any debt. So, I hope that what I've shared, the points that I shared, that I said something that gives you some food for thought. I hope that, I want us to just be informed and just I just wanna bring things to our attention that we might be overlooking. I know, and when I say we, I mean me. I know that at one point I was overlooking the things that I like to talk about, and we just have to, as I always like to quote Maya Angelou, what her quote on saying, "When you know better, you do better." And I can't beat myself up for things that I didn't know, but now that I do, I'm trying to do my best. I wish I had I wish I had the money mindset that I had today when I was in my 20s. Maybe then I would have been more focused on buying property and increasing my uh, contributions to my 401k. But when you're just trying to get by, when you're not thinking long term, even trying to set yourself up, not even for retirement, but positioning your money and making sure that you're accumulating assets that are going to really help you on your path to having the financial stability that I wish I had today. But oh, War Thunder Boy, I don't know what you're about to say, but let's take a look. What are you saying? 40% more. Okay. Let me take a look through the chat and see if there's any questions. Guys, let me know if you have any questions. I hope you guys have a nice holiday. I hope that spring is thriving around your gardens and you are getting ready to um, enjoy the summer. All right, taking a quick look back. I don't see any questions. They have always had education funds. My son will be starting college soon, and my daughter is about to start her master's debt free. That is awesome, Sledge. That is awesome. And I hope they realize the gift that you have given them. Some people just don't understand. The one you hope to see me and at the Berkshire Hathaway, you will not be seeing me there. Oh, thank you, Denise, for catching the replay. I know it's a holiday and people might have a lot going on, but I I just like to pop on, keep to my normal schedule. My mom's house is really close. It's like 2 miles away, so it's not hard for me to make the time to pop on. So Denise is also sharing that she started working at nighttime at 19 full time and went to school part time. Yes, that sounds just like my path of then having to go to classes on the nights and weekends for a long, long time till I was nearly 30 in order to get that completed. I did 1 full year of college before I started working full time. But even some of those classes, I think there were a few that I had to go and retake at the community college, some basic things, I wasn't trying to pay the university price for intro to government and some electives, some music, and I did a few electives down there in order to help me to ease my budget. Thank you, Barry, for tuning in. Um, And anyone that's new here, another part to my journey of how I wound up on the path and was really living the lean years as far as my budget and just trying to make ends meet is I was a teenage mom, so it was never just me. And with that, I did when I was 19 and working full time already, I also had an apartment. I had a car at that time, and then wound up getting another car probably by the time I was like 2021. I had a used car. I got a little bit of a better car a couple years later. But, even with that, do your best to, if you can, if there is anyone younger listening right now, to try to have roommates, stay with family, focus on getting your education or getting your trade. I know it's not everyone's path is not necessarily going to be becoming a nurse or something like that, but get some type of skill, get focus on that, your trade, mechanic, whatever it is, in order to really be on track to be able to take care of yourself to the best of your ability. And I feel like I let a lot of that get in the way on my personal journey, but it was as a little bit of a difficult circumstance because it's one thing to, for you to be one person staying at home, but then once you have kids, it's, are you gonna take me, my kid, and my boyfriend at the time? Like it just kind of evolved into the need of, or I created the need because I wanted to leave home, and, I really didn't have the encouragement from my family of focus on college, and I that's something that I definitely have shifted with when I was raising my girls on, I want school to be the priority, education, figuring out what you're going to do for the rest of your life, whatever it is the priority. Don't let work get in the way. Don't let, wanting to have a certain car and do certain things. Don't let debt, things that are just going to bring debt to your life, get in the way. Focus on how you are going to take care of yourself and, have make your life plan. And having an apartment and a car and working full time in a job that didn't pay much because I didn't have the level of education to command a job that paid more, just led to the situation that I was in. But let's take a look back on the chat. Wellness of Frugal Mama, have a good rest of your day with your family. How many ETFs or index funds do you have in your brokerage account? Evan, if you're still here, um, I have SCHD, SPHD, VTI, VOO, which I'll just leave it at that. I do have both. There is a lot of overlap there. I also have FXAIX. I think that's pretty much it that I can think of. Yeah, I think that's it. If I just trying to go off the top of my head. So FXAIX is the only one that I have in my that is for retirement. All the other ones I currently have in my taxable accounts. And the one that I have contributed the most to this month has been SCHD. I think, added $300. So about 12 shares earlier this month. But still building on all of my portfolios. But I have SCHD and SPHD in my dividend portfolio. Let's see. Your videos are inspiring for a new investor like me. Thank you. Thank you for the compliments and the comments, Old Hammer. I appreciate that. So I was thinking of putting SPLG into my account along with FSKAX. Um, so that's at Fidelity, FSKAX. That's a Fidelity fund, correct? FSKAS. Oh my God, my computer's so slow. Fidelity total market. Uh, if you're gonna stick with Fidelity, why not do FXAIX? I mean, it's very close. I mean, SPLG has an expense ratio of 0.02, while FXAIX is 0.015. So quite insignificant of a difference there. But if I was using Fidelity, why not just go with the Fidelity fund was what was crossing my mind. If I knew about SPLG, if I knew, let me see, make sure it's what I'm thinking of. Yeah, if I knew about SPLG before I if I discovered that before VOO, I would have gone with SPLG. But because of the expense ratio, and after learning about it, I went with FXAIX once I was making a choice of creating an investment over at Fidelity because I felt like that was the best option for me to get exposure to the S&P 500. Oh, you have that in your Roth? Okay. But yeah, very very close, very similar. If I and I actually had a chance to get started with an SPLG position, and I guess I just was just stuck to my same path that I've been on, and I bought a full share of VOO, and that could have been an opportunity for me to switch over to SPLG in that same portfolio. But like I said, it's very insignificant as far as the difference in the expense ratio, but it would have been a small bit of savings. I know another reason why people gravitate to it is because of the share price being so much lower. So you're accumulating the shares quicker, and if that's an incentive that gives you like inspires you and makes you feel good, then go for it. So all right. Yes, chocolate drop. I will stop by later. Now that I know that I'm not gonna be late because you're in a different time zone. All right. So guys, you can follow me on IG. I see Nightbot is dropping that. If you don't already have me over there, I do post in my story more regularly than in my actual content within my channel, but you can also catch my YouTube shorts here for most of the same content. But I do also share in my Instagram stories, sometimes including my options trades of the day. Okay, I'm just scrolling back, taking a look in the debt free Natalie. If you're still here, hello. It's nice to see you here. I need Yes, we all need to get some plants and maybe make sure to give the garden a little extra love this summer considering, everything that we are being faced with increased prices coming. So, I think Natalie, I discovered your channel when you were on highlighted by Roberto one night a few weeks back. All right. Well, I'm not seeing any questions. Let me just scroll back down. So, guys, if you're new here, subscribe to the channel, set that notification to all so that you can keep up with my videos and live streams. Feel free to drop any questions after the live, any requests for videos, or anything that you would like. Consider joining channel memberships in order to support the channel and have additional live streams with me so that we can be on track to encourage each other, ask questions, figure things out. But we are a little over an hour, and I'm going to end the live. I hope everyone has a great rest of your day, that you have a nice meal and enjoy your family or outside or whatever it is that you're going to be doing for the rest of the day. I will be back next Sunday, 3 p.m. Eastern Standard Time. And thanks again for tuning in. Let me see. Let me see. All right.